Hello and welcome to the weekly Forex Outlook at XM.com. Next week, we'll get a great deal of data out of the US, which will shed light on the US economy amidst the ongoing tariff war. In addition, the Bank of Japan will meet and announce its decision. We'll get CPI data from the Eurozone and Australia, and Canadians will go to the polls to elect their next Prime Minister. I'm Maria Pashurdiz, and joining me to unpack all this is lead market analyst Rafi Boyajian. So Rafi, let's begin in the US, where President Trump has signaled that he is willing to lower the 145% tariff rate that was imposed on China several weeks ago. What's the latest update on those negotiations? And what are we expecting from the data coming out this week, including GDP figures, PCE inflation, and the nonfarm payrolls report? What should traders be on the lookout for?
Well, Maria, I think we've definitely seen some kind of a de-escalation in tensions between the US and China, which, of course, when it comes to this trade war, though that relationship is the most important one. And although, yes, we've seen from President Trump kind of giving in terms of offering an olive branch to Beijing, I think from what we're hearing from the Chinese side is that they want to see more. They are not quite ready to join the negotiating table. They kind of pretty much said there's no talks going on, despite the contrary to what the US officials have been saying. But I think probably we may see some progress in the coming days. But of course, we're also going to be getting a lot of economic data over the next week. So that's going to be also attracting a lot of headlines amid all the doubts about, the US economic prosperity. So we're going to get, first of all, the advanced GDP readings. Some estimates put that in terms of a negative number for the first quarter, which I think will probably be down to the fact that a lot of US businesses front-loaded their imports. So if we get a big jump in the trade deficit, that has a negative impact on GDP. But nevertheless, the symbolic significance of seeing a negative number for GDP growth with everything else going on, I think that might probably weigh on market sentiment more than anything else. But of course, when it comes to Fed policy, the more important data will be the core PCE price index, which is the most important inflation measure for the Fed. And we may see, as we saw with the CPI report, a bit of an easing in inflationary pressure. So core PCE might come down to 2.5% in March, and that would potentially pave the way for the Fed to cut rates sooner rather than later. We're also going to be getting, of course, the jobs report for April. And again, we're expecting to see a bit of a moderation here. Last time we got a strong number of 228,000. From April, we may get a much lower figure of 130,000. But I think this is to be expected. I don't think it would basically cause increased urgency for the Fed to cut rates immediately. But if overall we get a softer set of numbers than anticipated, I think that's going to add to the speculation about the Fed cutting rates most likely in the June meeting as opposed to July, which is when it's currently fully priced in right now. For the May meeting, I think it's almost certain, despite some dovish remarks from Fed officials in the last few days. I don't think the Fed will be cutting rates as early as the May meeting. So I think the earliest we could expect a rate cut, if the data moves in the right direction or in the wrong direction, depending on which way you sit, I think June is the earliest the Fed could cut rates. For the Fed, yes, we might see some selling pressure should we see increased rate cut expectations. However, on the whole, if we see some positive progress in terms of trade negotiations, whether it's with China or with other nations, I think that might in fact be positive for the greenback.
Turning to Japan now, the Bank of Japan will announce its monetary policy decision on Thursday. Are policymakers concerned about how the tariffs may impact their inflation goal? Do you think they'll hike rates soon? And what will that mean for the yen?
So that is an interesting question. So we've heard from a few BoJ officials already, and they are worried about the impact of the trade war on the Japanese economy. However, they've also been saying, particularly also from Governor Ueda, that they still expect, both inflation and wages to continue growing at a sustainable pace, which would potentially allow the BoJ to raise interest rates again later in the year. But of course, the timing is even more uncertain now, given the escalation in trade tensions. So although the BoJ isn't expected to cut interest rates at their May 1st meeting, we will probably see the growth forecast being revised lower. They're probably going to maintain their inflation forecasts. And so this will basically keep the door wide open to another rate hike later this year. But I think should Governor Ueda maybe more explicitly suggest that there's a very good chance there's going to be another rate hike this year, and given that market expectations have been pared back, I think that would probably lead to some readjustment in rate hike bets, and we could see the yen kind of appreciate a little bit on the back of that. But of course, we have to keep in mind that the yen has also been benefiting from safe haven flows. So even if you get a hawkish outcome from the Bank of Japan meeting, but we see significant de-escalation in trade frictions, that could overall be negative for the Japanese currency.
Turning to upcoming CPI data now, what are we expecting out of the Eurozone and Australia? And how might their respective currencies be affected?
So indeed, we're going to be getting some important CPI numbers out of the Eurozone and Australia. Now, for the Euro area, we've heard from the ECB, they've kind of been pretty strongly hinting that they're going to continue cutting rates. But of course, we have to keep in mind that the ECB doesn't have that much room to go in terms of lowering rates further, whereas the Fed does. So that interest rate differential could potentially be positive for the euro versus the US dollar. On the other hand, even if we do see weaker than expected CPI numbers out of the Eurozone, and in addition to that, we're also going to be getting flash GDP numbers as well. If at the same time we get the escalation in trade tensions, then that would be more negative for the euro in such a scenario. For the Australian dollar, however, investors are pretty much they're very, very dovish when it comes to the RBA, even though the RBA has so far delivered just one rate cut. They're expecting the RBA to be cutting rates for all but one of its remainder meetings of the year. So even if we get CPI data out of Australia, which underscores the need for further rate cuts, I don't think we're going to see a huge impact on the Australian dollar. And I think the Aussie is more likely to react should we get a positive or a strong CPI data that would potentially lead to some paring back of those rate cut expectations for the RBA.
And finally, in Canada, Canadians will head to the polls on Monday to vote in a general election. Do you think former Bank of England and Bank of Canada Governor Mark Carney is likely to become their next Prime Minister? And how might a win for the Liberals impact the Canadian dollar?
So the polls, looking at the polls, that is what they are telling us, that the Liberals are on course to win the election. And this comes, of course, those basically exchange of, not very nice words between both Trudeau, Trump, and also Carney and Trump. And so it looks like Canadians have been impressed by both Trudeau's and Carney's handling of the trade war. It's basically stoked patriotism among Canadians. And this has been negative for the Conservatives, which prior to this trade war escalation, they were in fact on course to win the election. The question here now is that even if the Liberals do win, get the most votes, are they going to be able to secure a majority? Because of course their current coalition partner, they're expected to lose most of its seats. So if we do end up with a hung parliament, it's going to be difficult for the Liberals Liberals to find a suitable coalition partner, and that would lead to uncertainty, and that wouldn't be very positive for the Canadian dollar. However, there's a good chance though they will be able to get a slim majority, and that would potentially boost the loonie a little bit. In the other scenario that we get a surprise win by the Conservatives, I think this would probably be even more positive for the Canadian dollar, because the Conservatives are pledging much bigger tax cuts than the Liberals. So that's basically, these are the most likely outcomes that we're looking at heading into the election.
Rafi, thanks so much. This was the weekly Forex Outlook here at XM.com.